President Donald Trump proposed an additional $100 billion worth of tariffs against China. This just days after China proposed $50 billion worth of duties on American goods. The escalating standoff has seen a sell-off on markets, including the JSE, and has brought with it major volatility. Well, Michael Treherne is a portfolio manager at Vestact. He joins me now. Michael, good afternoon, and thanks for coming in. I want to bring this closer to home. This trade war does not only affect potential investments that you're getting in, but the local economy is also impacted, is it not?
Yeah, for sure. So we live in a global village. We don't live in isolation. And when the two biggest players, or the two biggest contenders in your global village go to war, everyone else suffers. So the US initially proposed $50 billion worth of tariffs against China. China said, if you want to play like that, we're going to retaliate with $50 billion against you. Donald Trump then said, that's unfair that you are retaliating. We may be going to potentially impose $100 billion. And China said, well, if you're going to go $100 billion, we will also do $100 billion. So as it stands at the moment, it's still all up in the air. But for us locally, if they go to war, things just get more expensive globally. Global growth will decrease. More trade equals more growth, which equals more prosperity globally. If we don't have that, we suffer here in South Africa, particularly if we start looking at our minerals, which we export to both countries. Those could potentially be hit. As far as mining companies go on the JSE, the commodities that they produce also get hit. So, yeah, it's far-reaching, not only for the US and China.
There has been this view that just following the list of items that China's proposed on US-American goods entering China, surely wine, agricultural goods that South Africa exports could find a space in China. Could that be a benefit?
Yeah, for sure. So at the moment, only about 4% of what our total exports to all nations is agriculture related. So there's lots of scope for growth. One of the key areas where China hit the US was in soybean tariffs of 25%. South Africa over the last decade has actually increased our soybean production by, I think it's threefold over the last decade. So there's definitely potential there. And what happens is if China's imposing tariffs on the US, it means that there's more space for everyone else to compete. So even if the US technically is cheaper than South Africa, just by having those tariffs, all of a sudden it becomes more expensive than South Africa potentially, and we could then export more and hopefully create jobs down here.
An opposing argument, though, Michael, would be that the last thing South Africa needs is a global environment where everyone's putting up tariffs. The sort of negative consequence of that might just outweigh any benefit we get from exporting goods to China. Is that not the case as well?
Yeah, I'd say number one, the first prize here for global participants is that none of these things go ahead. Most people are saying it's Donald Trump's just posturing. He's lowballing people, and then if he has to backtrack a bit, he scores political points and one or two tariffs, and that's it. And in the global grand scheme of things, it's not a problem. And if you have a look at what he did with U.S. corporate tax, it was at 35%. He said that's way too high. We have to be at least 15%. That was a number he ran with, and when the dust settled, he managed to get it down to 21%. So I think that's what's happening here, is he's throwing very big numbers around. The US and China are going to sit down and talk, and I'll be very surprised if both nations are talking $150 billion worth when the dust settles.
I've just got a few seconds. I've got to throw this at you. It's ironic that it comes at a time when locally we had this Ramaphoria, as it is called, when after the elective conference in December, we saw the market strengthen. The Rand had a fantastic run. So it's saddening to see that this is happening now when we could have actually continued with that progress.
Yeah, definitely not the right timing, especially because lower growth and higher prices generally lead to interest rate hikes. Interest rate hikes hurt growth as well further, and that's partly why I think we're seeing the dollar rise today, is the potential for increased interest rates at a lot quicker rate. Not good for us.
All right, thanks very much indeed, thanks, Michael. That was Michael Treherne, portfolio manager at Vestact. Now, before we close up here, let's take a quick look to see what's been happening on the JSE. It's